Silver is taking off. The real reason may surprise you. Something quiet is happening in the global financial system right now. Not loud, not obvious. Not on the front page of any major newspaper. But if you know where to look, and most people don't, you can see it clearly. Silver is moving. And the reason it's moving has almost nothing to do with what most financial commentators are telling you. Stay with me. Because by the end of this video, you're going to see this metal and this moment in a completely different way. Here's what most investors think when they hear silver is rising. They think it's just following gold, or they think it's a speculative trade, or some industrial demand story that'll fade in 6 months, and they move on. That's a mistake. Because what's actually driving silver right now isn't a trade. It's not a trend. It's a structural shift, one that's been building for years, and it's finally reaching a tipping point. We're going to cover 3 things today. First, why silver is fundamentally different from every other asset on the planet right now. Second, the hidden macroeconomic forces that are quietly pushing it higher. And third, the one number that most analysts aren't talking about, but that changes the entire story. If you're a gold investor, a retail investor, or someone who's simply worried about where the economy is headed, this video is going to matter to you. Let's start at the beginning. Section 1. The metal that nobody takes seriously. Silver has always had an image problem. Gold gets the headlines. Gold gets the central bank meetings. Gold gets the billionaire investors and the geopolitical drama. Silver gets ignored. And that's exactly why this moment is so interesting. Because throughout financial history, the assets that have produced the most extraordinary returns are almost always the ones that were being ignored right before they moved. Think about that. When everyone is already excited about something, when it's already on the front page, the easy money has already been made. The trade is crowded, the upside is priced in. But when something is quiet, when the crowd hasn't noticed yet, when the fundamentals are building beneath the surface while the mainstream looks the other way, that's where the real opportunity lives. And right now, silver is one of the quietest major assets on the planet, despite what is happening beneath the surface. So what is happening beneath the surface? Let's talk about supply, because this is where the story starts getting uncomfortable. Section 2, the supply crisis nobody is talking about. Here is a fact that should stop you cold. Silver is being consumed faster than it is being produced. Not metaphorically, literally. For multiple consecutive years now, the silver market has been in a structural deficit, meaning global demand for silver exceeds global supply. Every single year, the world uses more silver than it mines. Now, if you heard that about oil, you'd panic. If you heard that about wheat, you'd panic. If you heard that about any commodity that the world depends on, you'd understand immediately that this is a problem. But because it's silver, most people shrug. Here's why that's a critical error in thinking. Silver is not just a monetary metal anymore. It hasn't been for decades. It is a critical industrial material, embedded in the infrastructure of the modern world. Every solar panel on Earth contains silver, and we are building solar panels at a scale the world has never seen before. Every electric vehicle contains silver, in the wiring, in the sensors, in the battery management systems. And we are producing EVs at a scale that would have seemed impossible 10 years ago. Every smartphone, every 5G antenna, every advanced medical device, every defense system, every semiconductor, silver is in all of it. And here's the part that doesn't get nearly enough attention. You cannot easily substitute silver in most of these applications. It has the highest electrical conductivity of any element, the highest thermal conductivity. It reflects more light than any other metal. For many of the technologies that the modern world is betting its future on, there is no adequate replacement. So what happens when you have an irreplaceable material in a structural supply deficit at the exact moment that global demand is accelerating? Historically, the math begins pointing in one direction. But wait, because the supply story is only half of what's happening. The other half is even more important. Section 3, the macro environment. A perfect storm. To understand why silver is positioned the way it is right now, you need to understand the macro environment we are actually living in. Not the one the financial media describes, the real one. Let's start with debt. The United States, its government, is currently carrying over $34 trillion in national debt, and that number is not shrinking. It is growing at approximately $1 trillion every 100 days. Read that again, $1 trillion every 100 days. Now, when a government carries this level of debt, it has very few options. It can cut spending dramatically, which is politically almost impossible. It can raise taxes significantly, also politically toxic. Or it can do what governments throughout history have almost always done in this situation. They inflate. They allow, sometimes even engineer, a gradual erosion of the purchasing power of their currency. They make the debt cheaper to repay by making the currency worth less over time. This is not a conspiracy theory. This is documented monetary history. It happened in Rome. It happened in Weimar Germany. It happened in every major empire that overextended itself financially. And when currencies lose purchasing power, hard assets rise. Gold understands this. That's why gold has been hitting record highs. That's why central banks around the world, China, Russia, India, Poland, Turkey, have been buying gold at the fastest pace in modern history. But here's what most people miss. Silver follows gold. Always. Throughout all of modern history, in every major gold bull market, silver eventually catches up and then overshoots. Why does silver overshoot? Because silver's market is dramatically smaller than gold's market. The total above-ground investable silver supply is worth a fraction of the total gold market. So when institutional money starts rotating into silver, when the trade becomes recognized, even a relatively small flow of capital can move the price dramatically. This is what traders call leverage to the upside. Now let's add the Federal Reserve into this picture. Section 4, the Fed, interest rates, and the trap. The Federal Reserve has been fighting inflation with high interest rates. You know this. Everyone knows this. But here's what most people haven't fully processed. The Fed is trapped. On one side, if they keep rates high for too long, they risk crashing the economy. Corporate debt becomes unserviceable. Commercial real estate collapses. Banks come under pressure. The government's own interest payments on that $34 trillion become catastrophic. On the other side, if they cut rates too aggressively, inflation comes back. And in a world already watching the dollar's credibility with increasing skepticism, a return of inflation could accelerate a loss of confidence in U.S. monetary policy. Either path has consequences, serious ones. And silver, sitting at the intersection of monetary fear and industrial demand, benefits from both scenarios. If the Fed pivots and cuts rates, real rates fall, the dollar weakens, and precious metals surge. This is the historical playbook. Every time real rates fall significantly, gold and silver move. If the Fed holds or over-tightens and triggers a recession, fear enters the market. Investors flee to hard assets. Gold goes first and silver follows. There's a phrase used in finance, asymmetric risk. It means a situation where the potential upside significantly outweighs the potential downside. When you look at silver's current positioning, the supply deficit, the industrial demand acceleration, the macro environment, the Fed's impossible situation, the asymmetry begins to look striking. But here's where it gets even more interesting. Because we haven't talked about the gold-silver ratio yet, and this one number may be the most important thing in this entire video. Section 5, the ratio that changes everything. The gold-silver ratio is simple. It tells you how many ounces of silver it takes to buy 1 ounce of gold. Right now, that ratio sits around 80 to 1, meaning silver is roughly 80 times cheaper than gold in relative terms. Now let's look at history. Throughout most of recorded monetary history, this ratio averaged somewhere between 15 and 30 to 1. In ancient Rome, it was fixed at 12 to 1. Even in the 20th century, before the modern financial era, ratios above 50 were considered extreme. In recent major silver bull markets, 2011, 1980, the ratio compressed dramatically. In 1980, it touched 17 to 1. In 2011, it reached 32 to 1. Today, at roughly 80 to 1, silver is, by historical standards, extraordinarily cheap relative to gold. Now, does this mean the ratio must revert? No. Markets can stay irrational for a long time. Anyone who tells you a reversion is guaranteed is not being honest with you. But here's the conditional logic worth considering. If gold continues its current trajectory, driven by central bank buying, de-dollarization concerns, and macro uncertainty, and if silver even partially reverts toward historical norms, the implied price of silver becomes a number that most mainstream analysts are not currently discussing. At a 40 to 1 ratio, with gold at current levels, silver would be dramatically higher than where it trades today. At a 30 to 1 ratio, which was achieved as recently as 2011, the numbers become extraordinary. This is not our promise, this is arithmetic. And the arithmetic is why a growing number of sophisticated investors, not retail speculators, but institutional analysts and macro funds, are quietly building positions in silver right now, while most of the financial media is still looking at the stock market. Section 6. Geopolitics and the dollar. There's one more layer to this story that we haven't addressed, and it may be the most consequential of all. The global monetary order is shifting. This is not a dramatic statement. It's a documented geopolitical reality that is playing out in real time. Countries representing roughly half of global GDP are actively working to reduce their dependence on the U.S. dollar in international trade and reserves. The BRICS nations, Brazil, Russia, India, China, South Africa, and their expanding membership have made de-dollarization an explicit strategic priority. Central banks globally bought more gold in 2022 and 2023 than in any year since records began. That is not coincidence. That is a coordinated, deliberate signal. When central banks lose confidence in a reserve currency, they don't hold press conferences. They quietly accumulate hard assets. And if the dollar's role as the world's reserve currency gradually diminishes, even partially, the implications for hard assets like gold and silver are profound, because right now, the entire global financial system is built on the assumption that the dollar holds its value, that U.S. Treasuries are the world's safest asset. If that assumption starts to crack, even at the edges, the demand for real, tangible, finite assets accelerates dramatically. Silver sits at the center of that shift. It is simultaneously a monetary metal, historically used as currency for thousands of years, and a critical industrial input for the technologies of the future. No other asset combines those two characteristics. So let's step back and look at what we've covered. A structural supply deficit that has persisted for years, with no clear resolution in sight. Industrial demand that is accelerating, driven by solar, EVs, semiconductors, and technologies that cannot easily substitute another material. A macro environment defined by unprecedented government debt, a trapped Federal Reserve, and currency debasement risk. A gold-silver ratio sitting at historically extreme levels, implying that silver is deeply undervalued relative to its monetary companion. And a geopolitical shift that is quietly redirecting global capital away from paper assets and toward hard ones. Each of these forces individually would be worth paying attention to. Together, happening simultaneously, they represent something that doesn't come along often now. Here is the honest caveat: markets are unpredictable, timelines are never certain. Silver has frustrated investors before. It can be volatile, it can consolidate for years before moving. Nothing in this video is financial advice. Do your own research, understand your own risk tolerance, but ask yourself this question. 5 years from now, when you look back at this period, which would you regret more, paying attention or ignoring it? The quiet moves are happening now. The question is whether you're watching.